Ladies and gentlemen, thank you for joining us today for Venture Houston 2023, hosted by HX Venture Fund.
Good afternoon, and congratulations for making it to our last really important session here today on the intersection of digitalization and decarbonization. I want to go ahead and invite my panelists to come on through, and I'll introduce you as you come on. So our moderator today is Wogbe Ofori. If you're from Houston, I hope you already know Wogbe. Yeah, I can tell. We got fans. Come on in.
All right.
Wogbe, as you know, is a consultant a founding consultant of WRX Works. And when I think of Wogbe, I think of hard tech, and let's get it done for Houston.
There we go.
Janice Tran is showing the founder's voice here from Houston and sharing with us, her own personal journey, what worked, what was harder here in Houston. And please welcome any questions as we go through the app. And those will go to Wogbe, and he'll be moderating in that way. Really thrilled to have with us Ben Lerer, the general partner of Lerer Hippeau. So Lerer Hippeau Ventures in New York is a venture fund we are so proud to be limited partners with at HX Venture Fund. This is a phenomenal team. Ben Lerer, Ken Lerer, Eric Hippeau as the GPs. And these guys are working really in every vertical now. They began their amazing work in digital media and in consumer facing, but have expanded that now to everything, including industrials and all through B2B. If you know Casper mattresses, if you know Warby Parker sunglasses, if you like Everlane t-shirts, these are all Lerer Hippeau-backed companies from their earlier days in the consumer front. So ask Ben what he's up to next. What next household name are we going to be hearing about that is Lerer Hippeau-backed? If you want to know where the puck is going, Lerer Hippeau is a great place to go to find that answer. And then, of course, we have Moji Karimi, CEO and co-founder of Cemvita Factory. So synthetic biology technology here, one of the most exciting companies gaining traction right now, fast traction here in Houston. And so understanding his journey alongside Janice's was going to be fascinating. Without further ado, over to you, Wogbe.
Thank you, Sandy. Well, good afternoon, everybody, and thank you very much for coming to one of the two last sessions of the day. Now, this is always a very interesting spot to be in because how many of you have been here all day? Oh, man, give yourself an applause. Just give yourself an applause. You can work it out. Man, see, that shows me that applause was so weak. It shows me how tired you are. Could you please try it again? Give yourself an applause. Thank you. Yeah, thank you. This is what we need to do. Now, look. It's a relatively small group, and I like this venue better than the other one because this one we can actually see each other a little bit more, and it just feels a little bit more intimate. So this is going to be a little bit different than what you may have experienced before because I don't like doing kind of straight, well, so Janice, what do you think, Ben? What do you think, Moji? What do you think? I don't like doing that. So, and we've already discussed this. And we have agreed that we're going to let you drive the conversation. We have a few things that we do want to talk about, but instead of doing it where we are going to be talking and talking and talking for 35 or 40 minutes and then have a few minutes for Q&A, we're going to flip it the other way around. And I want to drive this by the Q&A. So I want you guys to start thinking about what do you want to get out of this today? And when I say this, I'm not just talking about this particular panel. So you've heard a lot of great speakers. You've heard a lot about the energy transition or clean tech or climate tech, sometimes called different things. There've been a lot of great discussions today. Now that we're getting toward the end and the conclusion of a great day, what are the things that you think, there's one thing that actually triggered in me that I want to think about, and maybe here I'll ask it. Now, we're here to talk about the startup journey within that. So we've got two founders and an investor, and there are a couple of interesting questions that have already been submitted in. But before we get started, how many of you in the room are investors? Don't be so shy. Okay, excellent. How many of you are founders? Aha, not as shy. Excellent. How many of you are academia? Aha, good, all right. And how many of you are service providers? Aha, good. Now, service providers, I'm giving you a special shout out because we never get any kind of love. So please give some love to the service providers today because we never get any love because we don't have money, we want to get money. So one of the very first things that I want to do is I want to ask Moji. Moji, the question I ask the audience is what do they want to get out of today? But I'm going to flip it around since you're on stage. What is the one thing that you want to tell everybody today? So normally we hold that to the end and say, well, what's the one takeaway that you want people to come away with today? Can we start with that? What is one thing?
Sounds great to me. So before I get to that, I have to share a bit of personal information. I've developed this kind of obsession that is turning into this addiction about the future.
Oh.
And really sitting down thinking about really understanding the trends and academically trying to understand why things happen the way that they do. So the thing that I would hope for everyone to take away is one of those predictions that I have about the future. And here it goes. In the future, you may not have companies that would call themselves an oil and gas company or like a mining company. What they would do is they would call themselves a natural resource company. Because if you think about it, fundamentally, that is what they're doing. They have this relationship with nature, and that's where they get the feedstock for what they do. Then the question becomes then, who would be the winners in this new kind of an industry or category? And the answer is, and it's pretty simple, whoever that could provide the same product at a competitive cost, but with minimal environmental and carbon footprint is going to be the winner. Of course, it's really hard to pull off, but that's really the answer. Because if people could buy the same product at the same cost, they are going to choose the more sustainable option. But if you want them to really go out of a limb and pay a lot more, they may not. So natural resource company of the future is really what I'm hoping to establish, and that's the whole vision for Cemvita, which we could get into a little bit, but that is really my message to the world, is that we should think in terms of natural resources, not just picking a specific, like if it's oil and gas or different sources of energy, so natural resources.
So I have a question for you on that. So even at cost parity, do you think that there's enough awareness and appreciation of the value proposition of the sustainable option for people to choose the sustainable option versus what they already know?
In some areas, I would say yes. In other areas, and this becomes more difficult as you go deeper into industries. Like, for example, an average person wouldn't know the petrochemical processes and the products that they make that ends up in the products that they use. But there's a lot of feedstocks that happen along the way that have different carbon profiles, right? But what I'm saying is we should remove some of the burden from educating the public, but build that into the way the businesses operate by being able to provide the same cost, but with lower carbon and environmental footprint.
Ben, got any ideas on that?
I don't know if you answered the question yet, but because I don't have an answer to the question either for what I'm trying to get out of today. I was shocked at how many of you are founders. I think I didn't understand that was going to be the format. So I'd like to leave here with a new portfolio company, ideally.
Hey, give an applause for that. I think a lot of people liked it.
We can talk separately about that. Does it make sense to give just like a 1 minute on our backgrounds, do you think, and sort of what we're doing?
Sure.
Broadly, just for folks in the room, and maybe this is totally self-serving, but at Lerer Hippeau, we're, as Sandy mentioned, we're true generalists, but our sort of specialty is early stage, and so we're really 0 to 1 investors, first money into pre-seed or seed, or I guess with how screwed up the market is right now, sort of these in between seed and A rounds that are happening a lot, we're deeply founder focused. I really sort of appreciated like the way that you articulated like a big vision as like the foundation of why you go to work every day, and I think that as early stage investors who are generalists, we really, every investor says this, but we really do truly have to start with the founder. And more and more, we're being drawn to founders who are doing something for the right reasons. The right reason doesn't necessarily have to be the right side of the. I think we want them to be part of like a better future, but for reasons that are really personal and true to them and building something that they really genuinely believe in and have to do. And I think the last generation and some of the mania that's happened over the last few years, you saw a lot of people starting companies for the wrong reasons. And because there was a bunch of capital around. And so that's something that's really important to us. And you're sort of, we don't know each other well, but
we'll know at the end of this.
After happy hour. But I appreciated sort of like the way that you articulated that.
Thank you.
I mean, one of the things I want to unpack a little bit. Oh, by the way, so here's something that the audience can do. I'm encouraging audience participation. And if you hear something that sounds, hey, that was really interesting, but I don't know if they went deep enough, you can ask us to unpack it. And you can go ahead and shout it out. You can just say, hey, could you unpack that? And we'll go in. And so we're going to unpack that a little bit more, because there was a session earlier where there was a discussion where they were juxtaposing the motivations between CVCs and what they were calling financial VCs. But I don't think I've heard this juxtaposition, especially in context of energy investments or energy-related investments or clean tech, about the generalists versus those who specialize or say they specialize in energy. So particularly Janice and then Moji, from your perspective as founders and having been ones trying to get money, have you seen any difference in how they respond? And we're going to have to put that in context of time, because I think that this has evolved somewhat, even in just the last, say, 4 years. What do you think, Janice?
Yeah, maybe I'll answer the first question and the second question really quick, because I wanted to talk about what I think success in this session is. It was really cool to see all the amazing startups that are in the Houston ecosystem. Honestly, I haven't been in Houston that long. It's only been about a year and a half. And we moved actually our company to Houston because a lot of our customers are here. We saw like the ability to grow a company in Houston a lot easier in terms of talent and permitting, that type of thing, than any other place in the United States. So we came here. And seeing the startup community grow while I've been here, especially the energy transition community grow here, has been really interesting. So success to me is hopefully we can grow this startup community faster and make it known across the United States what's happening in Houston. I spent a fair amount of my time before starting Kanin. I was an investor at a fund called Generate Capital that was based in San Francisco and Silicon Valley, and I just saw the power of having that scale. Like, Silicon Valley is where startups are born, so that's where investors are. That's where people go to find the next big thing, and I don't see why Houston can't be that, especially for energy transition startups. So that would be my call to action is let's continue growing this community. Let's bring more founders from around the world to Houston so that we can create this collective and have that snowball effect. But going back to your question, which I think is a really great one, about generalist investors versus specific investors. So as a quick background, Kanin Energy is a clean energy company. We take waste heat from industrial processes like cement, steel, oil and gas, that type of thing, and then we turn that into clean power. We do that with what we call decarbonization as a service or energy as a service model. So very similar to like what happened in the solar industry. Now we're trying to apply that business model to industrial decarbonization and getting a lot of traction, especially in Houston and the industrial companies that are located here and across the world. So a lot of our investors that we attract are they're very deep, because you need to understand, investing in energy is very different than investing in software or investing in healthcare and such. You really need to understand like the intricacies of permitting, of policy, of interconnection, of technology. And so I think as But there are a lot of climate investors that are generalist investors that see kind of this growth in the market. They see the IRA, they see the exits that are happening, they see Tesla, and they want to get in. And so as a startup, we're between seed and Series A. It's really important for us to find the investor that's going to stick with this long term. And so, yes, while there is money, they actually may even be giving you a larger valuation. The big thing I always have to step back is they might not be here in a decade, but we want to be. So will they, through the ups and downs, be able to support us through it all, even if there's a down market and this climate tech is not as cool as it is right now? I think that's probably the biggest risk, and one where we have to think long term, which is kind of a little bit different than what the venture capital community thinks.
Yes, ma'am. Go ahead.
I wanted to ask, you went down the path I was going to ask. There's been so much talk about raising money, because that's a challenge for most people, raising money from the right partners seems to be
Yeah.
the equivalent challenge. And I wanted to know if you ever turn down investment, or how you think about that process, both for you and Moji, and then also Ben, who were kicked off essentially a company that chose the wrong partner, and then realized later down the road that was not going to be a fruitful relationship for a long term.
Fantastic question. Did everybody hear it? No, you didn't hear it in the back? The question was essentially about choosing your investor and how one goes about choosing that investor, and from both sides of the coin, whether you're an investor and looking at other investors that you may be co-investing with, or you're a founder looking for investment and saying, is this the right financial partner for me to move forward with and build this business? I think it's an excellent question. What do you guys think?
Well, so that was a really good question. I think, so partner fit is incredibly important, right? I mean, and beyond that, I actually think that people get very caught up in brand names and not necessarily caught up enough with the person on the team who's writing the check and who's going to be in the weeds with them. And so that's one thing. I think a firm is one part of the mixture. The person at the firm who's leading the deal is a different part of it. I'm less convinced that when sort of that a specialist versus a generalist is better or worse in any given situation. I've seen specialists back out, like sort of abandon companies that theoretically they shouldn't, and I've seen generalists totally mistreat companies. I think every flavor of thing has happened. I think at the end of the day, building that trust with an investor where you have true two-way transparency from day one, and where you know that you're able to not be marketing to that investor from the day that they invest, but you're able to actually deliver not only good news travels fast, bad news travels not at all. All of our most productive relationships are ones where from day one we're able to really impress upon them that we're going to be more supportive and have more available capital for them down the line if they're honest and open with us about their problems than if they're always trying to sugarcoat things and convince us to sort of follow on to the next round by not giving us the juice. And I think that's not me, Roque. I'm like this is crazy. And so I think that, but everything I'm saying is a luxury in this market. Right now, the idea that you can really go and pick and choose who you're working with, that exists in the rarest of circumstances.